right. So there's a lot of conversation around investment fees, fees for investing in general. You'll have the commercials that say stop paying your advisor, you'll retire with more money, things like that. Now, obviously, I'm going to be biased because I think everyone should invest their money through me, and that would be the best scenario in my opinion. But I'm going to try and have a fairly level headed, unbiased conversation today about it and just sort of try and give as much information, insight as I possibly can. So, at the end of the day, what's going to matter the most to you is how much money you earn at the end of fees, at the end of taxes, like end of day. What's going into your bank account. So if every investment was the exact same, if everybody had the exact same product, then it would make sense just to pay the least amount and keep the most of it. That's a no-brainer. Now, there's a lot of different types of products. Every public stock exchange, any investing place has access to it. There are private investments that are a bit harder to get access to, but that's a whole different kettle of fish and not for today's conversation. So what even are you really paying for with these investments? Because I think it's really important to understand. It's not like you get an itemized receipt when you make an investment, right? So what you're getting is essentially three things. Number one, you're going to get a custodian. They're basically the vault for you. They're holding your money. They're holding your shares of companies or bonds, whatever investment you have. Their job is to hold on to it, keep it secure, report on it. So that's where you get your statements from, as well as manage any transactions in or out of that account for you. Number two is going to be the investment decision makers. So these can be portfolio managers, or in the case of mutual funds, you have mutual fund management teams, which they have a bunch of layers of a compliance team, their own custodial duties, and honestly, there's quite a lot to it, but essentially it's the same service. They're the people who make the decisions on what is a good investment, what isn't, and if it's an actively traded account, then they will make those trades actively as they see investments become either more valuable or less valuable. They also work within your risk tolerance in order to make sure that they are not putting you in anything too risky or whatever else. They're the people who are analyzing the investments and making decisions on your behalf. And then the third thing is me, the advisors or planners that you would work with who help you make decisions on what's the right account types to use, how to structure it, and more importantly, just tie in those goals you have, because is this money for your retirement or are you saving to buy a house? That's two very different investment types and accounts and vehicles you would use, really. So that's where I come in. I kind of work with you on a direct platform, usually face-to-face or over Zoom, and we work on your goals. We work on essentially all the personal finance. And then I kind of help direct through to who's a good investment manager for you, and then also what the right custodian is going to be. And that often comes tied to the investment manager. But anyway, so those are the three things you're paying for. So the discount brokerages, essentially, you're only getting the first layer. You're only getting that vault and access. You are the investment analyst. You are doing your own financial planning. So that's essentially why it costs a lot less. And honestly, the fees on your investments, on your investment accounts, it's kind of just like a hill that your investment has to climb before it starts earning you money every year. So it depends on where the value is for you. There's a lot of stuff not even related to the investment that myself as planners and advisors will do in order to help you keep more of that money at the end of the day. Like talking about regular dividends versus eligible dividends. That's going to make a massive impact to you at tax time, knowing which one you have in your accounts. To give you a story from myself, I was a hardcore DIY, don't pay anybody, use Wealthsimple, life will be better type of investor when I got started. I met with a bank advisor. I felt that I was probably smarter than them, that, why would I pay you? I need to just pay myself. So I went with that route for a few years. I eventually got introduced to Andrew through a mutual friend and a coworker, and he gave me some advice that I actually implemented, and I was able to bump up my tax return that year without hindering me down the road. So I kind of was able to generate a bit more cash, which was awesome because I was saving up to buy a house. I didn't work with him. I just took his advice and ran. And over the next few months, I managed to lose hundreds of dollars because the investment I had, while good for long term, was not good for short term. And essentially, I lost a lot to market volatility. And then I realized that loss because I had to take the money out. I couldn't leave it any longer. I was trying to buy a house. So had I worked with Andrew, that alone would have paid for all the account fees for over 2 years that he would have charged. So, there's an example of where it makes sense. We've had a lot of people who've been investing for a long time with maybe banks or other people, and they're probably not getting the value for their fees. So it does definitely go in both directions. But I think at the end of the day, as a consumer, as the investor, I think you need to just understand those 3 things that you're paying for with your account fees. Understand exactly how much is included in your account fees, because your MER with mutual funds isn't always the whole story. There's sometimes trading fees and other investment management fees that get thrown in there. Your reports are always going to be your net after all fees, but it is very important to know exactly what you're paying for. And I think if you have that knowledge and you understand, then it makes it a lot easier for you to decide whether, you should be paying investment fees, you shouldn't be. As financial advisors and planners, we also have the opportunity to just do flat fee for planning. So if you just want the investment planning side and you don't really need the investment analyst side, we've got ways to do that as well. So at the end of the day, it just depends on what's the most valuable for you.